Have you ever walked into a bank, a store, or an office, calm, confident, knowing you belonged there, only to be treated like an intruder? Not because of what you said, not because of what you did, but because of who you are or who they think you are. If that moment ever happened to you or to someone you love, then what you're about to see will feel painfully familiar. Because today's story isn't about paperwork. It's about power, perception, and what happens when one woman turns quiet disrespect into systemic change. And the twist? She wasn't just a customer. She was the CEO. At exactly 10:43 a.m. on a Wednesday morning, a black woman in a charcoal gray suit walked into the executive loan office of Dominion Bank's flagship branch, confident, composed, and carrying a slim leather portfolio. No assistant, no entourage, just her and the paperwork. She took a number, stood in line like everyone else, and waited her turn at the premium desk. But the moment she placed her documents on the polished counter, the mood shifted. The loan officer, a sharply dressed man named Bradley, didn't bother to open the folder. He glanced at the woman, her skin, her face, her silence, and offered a tight smile that didn't reach his eyes. "Ma'am, these kinds of applications usually go through our standard department," he said, reaching for the folder. "This window is for verified businesses only." She replied calmly, "This is a pre-approved enterprise loan. I have confirmation from corporate." Bradley opened the folder halfway, scoffed, then did something no one in the lobby expected. He tore the paperwork in half. "We get a lot of people pretending they're someone important," he muttered, loud enough for others to hear. "We're not in the business of fantasy financing." She said nothing. No raised voice, no confrontation. Just a look. Level, unwavering. She picked up the shredded papers, tucked them back into her portfolio, and walked out of the building without another word. By the time she reached the sidewalk, she had already sent 3 texts. One to her general counsel, one to her chief of staff, and one to the compliance director overseeing discrimination reporting at the federal level. What the staff at Dominion didn't know, what Bradley hadn't even paused to consider, was that the woman he'd just humiliated wasn't applying for a loan. She was conducting an audit, a test of integrity. Because Dr. Amara Washington wasn't just another client. She was the CEO of Dominion Bank, and the branch that just tore up her documents? It had failed her test. This wasn't just about customer service. This was about financial discrimination, corporate accountability, and the hidden biases that quietly destroy trust in institutions. The shredded papers weren't just paperwork, they were evidence. By 3:00 p.m., her legal team would descend on that same branch, backed by federal compliance policy and a crisis response plan that had been written for exactly this kind of moment. Cameras had captured everything, so had a young teller's phone, still recording from under the desk. The incident would go viral in hours, and what began as one employee's decision to disrespect the wrong woman would become a national case study on racial equity, ethical banking, and institutional reform. But for now, there was only silence, the calm before the reckoning. Dr. Amara Washington didn't just walk out of the branch that morning, she walked into a storm she had planned with precision. The incident wasn't spontaneous. That specific location had appeared in multiple internal reviews and over a dozen unresolved customer complaints, nearly all citing subtle but persistent bias. There were no official violations, no smoking gun, until now. She had given that team every chance to prove the culture was changing. Instead, they gave her proof it wasn't. Back at her office overlooking the skyline, Amara was already processing more than just a ruined application. The torn documents weren't real loan files, they were a field test, crafted with authentic corporate credentials, pre-cleared financial data, and embedded metadata designed to trace interference. This wasn't a revenge stunt, it was a systems audit, and they had just failed, on camera, under pressure, and in front of customers. Dominion's internal dashboard showed a critical breakdown. The CRM system had flagged the application for fast-track processing, yet it had been marked fraudulent without so much as a full review. That single act triggered a cascade of compliance alerts. Her legal team, already briefed, moved quickly. General Counsel Maria Santos, Compliance Director James Wright, and Chief of Staff Ellen Rodriguez formed the core of Dominion's ethics response team, a unit Amara had built from the ground up to prevent exactly this kind of reputational collapse. While the staff at the branch remained unaware, the Home Office was in full investigation mode. Surveillance footage was pulled from multiple angles. A junior analyst flagged a social media post from someone who had witnessed the exchange and shared it anonymously. Just watched a loan officer rip up a black woman's business documents. Wild. The post wasn't viral yet, but it was spreading. Amara didn't need it to go public to act. The violation was clear. Statistical patterns backed up everything she had feared. The branch ranked at the bottom of Dominion's Internal Equity Index, showing longer service times and higher rejection rates for minority clients, even when matched on credit, income, and collateral. The data was damning. It wasn't about one employee having a bad day. It was about a culture that allowed disrespect to pass as due diligence. Bradley Mitchell, the loan officer, still hadn't realized who he'd dismissed. According to one staff message, he was joking about catching another fake. His regional manager, Patricia Kane, had ignored internal inquiries, as she had many times before. Her record showed a troubling pattern of dismissing bias complaints without independent review. That, too, was about to end. Inside her private suite, Amara assembled the crisis report. Evidence, witness logs, policy breakdowns, and protocol breaches. There was no need to raise her voice. The facts would speak louder. Dominion prided itself on being forward-thinking, ethical, and inclusive. But claims like that mean nothing when tested and found wanting. The legal team didn't alert the branch. That wasn't protocol. They would arrive unannounced under full corporate authority, with full documentation authority. If staff tried to interfere or cover up what happened, they'd violate not only internal policy, but federal law. Every interaction would be documented and preserved. Amara wrote a message to the board summarizing the incident and outlining her intent to respond decisively. Then, with clarity and calm, she added, "If this is confirmed, there will be no quiet settlement. Because what happened that morning wasn't about customer service. It was about financial discrimination, about racial bias hidden behind corporate smiles. They hadn't just mishandled paperwork, they had disrespected a leader who fought her way to the top of a system built to keep her out. They didn't know who they were dealing with, but they were about to learn." The branch doors opened with a soft chime that went unnoticed by most, until the first suit walked in. No one wore name tags, but their presence was unmistakable. 3 individuals, sharply dressed, moved with the quiet precision of professionals who didn't come to wait in line. The man behind the front desk looked up, confused. The air shifted. These weren't customers, they weren't regulators. They were internal legal, Dominion's elite compliance unit, and they had arrived with one objective, a full audit of everything that had transpired just hours earlier. Bradley Mitchell stood behind the loan officer desk, casually chatting with a junior associate about a client he had to shut down. The joke barely left his mouth when he noticed Maria Santos standing at the front counter, expression unreadable. She didn't introduce herself. She didn't have to. The assistant manager called for Patricia Kane, who emerged from the back office, only to find her name already on a printed review memo. James Wright pulled a sealed envelope from his briefcase. Inside, a corporate authorization for immediate investigation of discriminatory practices under federal and internal statutes signed by the CEO herself. Still, neither Bradley nor Patricia seemed to grasp what was unfolding. Then Amara walked in, not as the applicant, not as the woman dismissed and degraded, but as herself, CEO of Dominion Bank. Her presence was calm, controlled, and undeniable. The branch lobby, once noisy with everyday transactions, fell into an eerie silence. Some customers paused mid-conversation. A few employees went pale. One young teller stood perfectly still, eyes wide, as Amara approached the center of the room. She placed the torn loan documents, now laminated and tagged, onto the same marble counter where they had been destroyed. "Let's begin," she said quietly. Maria and James began conducting interviews. Screens were pulled up, service logs reviewed. Camera footage from every angle was time-stamped and downloaded. The footage confirmed everything: Bradley's dismissive tone, the tearing of official bank documents, the mocking commentary. The audio was crystal clear. "We don't approve make-believe businesses," his voice had said. And now it was part of a formal legal record. Patricia tried to intervene, offering vague justifications about high fraud risk protocols and due diligence. But James was ready. He opened a laptop to display Dominion's internal equity metrics, pointing to the branch's long-term discrepancies. Approval rates for minority-owned businesses were significantly lower than the national average. Rejection justifications were often vague. The decision to destroy documents without review had no procedural defense. Amara didn't speak until the evidence was laid bare. Then, with precise authority, she asked one question: what specific Dominion policy authorizes a loan officer to destroy a pre-approved file without verification? The silence that followed was long, heavy, and incriminating. Bradley glanced at Patricia. Patricia looked at the floor. No one answered. The legal team then moved into Phase 2, employee interviews under formal record. A private conference room was cleared. One by one, staff members were called in. Several confirmed that Bradley had a history of treating minority applicants with open skepticism. Others admitted they were afraid to speak out due to fear of retaliation. One junior employee handed over screenshots of internal messages that mocked customer accents, wardrobe choices, and business names, nearly all tied to non-white applicants. The pattern was undeniable. Meanwhile, outside the branch, a different kind of storm had begun to swell. A clip from earlier that day, showing Bradley tearing the loan documents, had surfaced on Twitter. It had been captured by a customer's phone, unnoticed at the time. The post now had over 12,000 retweets and counting. Hashtags like #banking, while black, and #financial justice were trending across platforms. News outlets began requesting statements. Customers began flooding Dominion's customer service line, demanding accountability. But inside the branch, Amara was focused. This wasn't about PR. It was about values. She addressed the remaining staff not with anger but clarity. Dominion Bank was built to empower communities, she said, not to filter them based on stereotypes. What happened here today is a betrayal, not just of policy but of purpose. She turned to Bradley. "You don't know me. You never bothered to ask. But I built this institution on the belief that finance should be a gateway, not a gatekeeping tool." Her voice remained steady, but the weight behind it was unshakable. "You tore up those papers thinking you were protecting the bank. But what you did was expose everything we're failing to fix." Then, without raising her voice, she issued her command. "You are relieved of duty, effective immediately. Security will escort you to retrieve your personal items. Patricia Kane will join me in executive review within the hour." The room was silent. No applause, no drama, just consequences. Bradley's mouth opened slightly, as if to argue, but the words never came. He looked around, searching for support, but found none. He had confused arrogance for authority, and now he had neither. As he was quietly escorted from the branch, Amara watched him go, not with revenge in her eyes, but resolve. What came next would not be easy. Policies would need to be rewritten, trainings overhauled, accountability rebuilt from the ground up. But in that moment, the message was clear. Dominion Bank would not tolerate bias disguised as protocol. Not anymore. The public wouldn't remember every statistic, but they would remember that a powerful black woman walked into her own bank, got disrespected, and changed the system from the inside out. That wasn't just a headline, that was history. The boardroom was quiet, not with indifference, but with anticipation. Executives sat in heavy leather chairs, each of them holding copies of the initial findings. Some looked defensive, others deeply unsettled. A few had already seen the social media fallout beginning to form beyond the building's walls, but none of them were prepared for the bluntness with which the facts had arrived. Amara stood at the head of the long table, not as a figurehead, but as the architect of the institution they were all now forced to examine under fluorescent light. She didn't need theatrics. The numbers alone were enough. James Wright began the presentation. He displayed equity data across multiple branches, highlighting glaring disparities in loan approvals, wait times, and service quality. The branch in question wasn't an outlier, it was a symptom. Approval rates for white-owned businesses had held steady at 87%, while minority-owned businesses hovered under 60%, even when accounting for identical financials. The discrepancy wasn't anecdotal, it was systemic. Maria Santos then followed with a legal summary. Federal regulations under the Equal Credit Opportunity Act and the Fair Lending Guidelines had been compromised. She cited case law, recent settlements, and potential exposure if the issue were litigated. Civil penalties could exceed 7 figures. Class action vulnerability was real. The bank's internal bias mitigation protocols were virtually unenforced. Compliance training was outdated and optional in 2 regions. Most damning of all, this wasn't the first complaint from that branch. It was just the first one the CEO had witnessed firsthand. Amara listened to it all, then turned to the board. "We are not here to contain a scandal," she said clearly. "We are here to confront our culture. What happened in that lobby was not an isolated act of misconduct. It was the result of a system that still allows perception to override process." Her words were sharp, but not angry, deliberate, measured, and unforgettable. "I don't want an apology memo. I want a transformation, not for PR, for survival." She laid out 3 options. The first, downplay the incident, fire one person, issue a vague statement, and hope it fades. That option, she said, was a short-term shield but a long-term disaster. The second, performative reform, mandate a one-time training, reshuffle middle management, slap on a community partnership. It would buy time, but not trust. The third, real change, comprehensive bias training, data transparency, third-party oversight, a new customer bill of rights, and permanent policy overhaul. It would be expensive, disruptive, uncomfortable, but it would mean something. Board members exchanged glances. Some began doing mental math. Others already knew the choice was binary: adapt or bleed. Amara didn't flinch. "You don't have to decide who you were," she said. "But you do have to decide who you're going to be now. Our customers are watching. So is the industry." She projected live engagement metrics on the screen. Hashtags were trending. Influencers had picked up the story. Requests for interviews had tripled in under 2 hours. And at the center of it all was a question the public was already answering for them. Does Dominion Bank believe in equitable access or not? Patricia Kane sat near the far end of the table, visibly pale. Amara turned to her without venom but without hesitation. "You were notified of complaint patterns months ago. You closed them without investigation. Can you explain why?" Patricia stammered, offering vague references to policy load, high turnover, and miscommunication. None of it landed. The room knew. Silence wasn't neutrality. It was complicity. As the final slide came up, Amara made it simple. "We either become the national model for ethical banking, or we become the next headline in corporate negligence. I'm prepared to lead the first, but I will not defend the second." The board vote was unanimous. Reform, real, sweeping, and permanent, would begin immediately. Training modules would be redeveloped with national experts. All performance metrics would include equity benchmarks. Executive bonuses would be tied to measurable progress. And most importantly, internal audits would be made transparent, with quarterly reports reviewed not just by leadership, but by the public. The decision wasn't just strategic. It was moral. Dominion Bank, for the first time in its history, would build a framework that didn't just protect profit, but protected dignity. And at the center of it all was a black woman who had been told to leave her own bank, and instead stayed to rebuild it. The transformation didn't begin in a press release or at a public podium. It began at 8 o'clock a.m. the next morning, right inside the same branch lobby where everything had unraveled. The marble floor had been polished, the lights slightly warmer, but the atmosphere had changed in a way no interior designer could touch. Standing at the center of it all, Dr. Amara Washington quietly observed as a newly assembled team of compliance officers took their positions. Each one wore a discreet badge that read, Customer Equity Advocate. Their role wasn't symbolic. They had full authority to observe, intervene, and document any instance of bias, subtle or overt. This wasn't damage control. This was infrastructure. The first memo sent to all Dominion Bank employees was clear and concise. Equity is not optional. Accountability is policy. Within hours, a mandatory 40-hour bias and cultural sensitivity training program had been launched across all departments. Attendance wasn't tracked by email signatures. It was monitored through biometric logins and post-session evaluations. HR wasn't just auditing performance reviews anymore. They were auditing behaviors. Because equity, Amara knew, had to be measured like anything else a business claimed to value. Meanwhile, a new tool was quietly going live, the Dominion Equity app. Designed in partnership with civil rights advocates and tech experts, it allowed both customers and employees to anonymously report incidents of discrimination, microaggressions, or procedural bias. Every report was encrypted, geotagged, and routed directly to the legal department and CEO's office. No middle layers, no buried emails, just real-time data and direct accountability. Transparency builds trust, and Amara had no intention of letting that trust slip through the cracks of corporate comfort. Outside the bank, the narrative had taken on a life of its own. The viral clip of Bradley tearing the documents had become a case study in modern-day banking discrimination. News anchors dissected it. Think pieces emerged. Hashtags like #BankAccountability and #Leadership with Purpose flooded social media. But Dominion didn't respond with spin. It responded with structure. Amara refused interviews at first. She didn't want the spotlight to obscure the message, but when she finally spoke, it wasn't to defend the brand. It was to redefine it. True leadership, she said in a televised address, is not about how fast you grow. It's about how you respond when your foundation cracks. You can cover it up, or you can rebuild it stronger. The public responded. Within weeks, Dominion's customer satisfaction scores rose by 89%. Loan applications from minority-owned businesses surged. Retention rates among frontline employees improved as internal culture shifted from fearful to inclusive. Investor confidence stabilized, then climbed. Federal regulators, once preparing an inquiry, issued a formal commendation for the bank's swift corrective action. Even Bradley, once the face of the scandal, was offered a choice, not out of charity, but out of principle. Amara believed in restorative systems. He could undergo 6 months of intensive diversity training, community service, and educational modules developed with national civil rights organizations. If completed, he'd be eligible to reapply, not for his old job, but for a position in Dominion's community outreach unit. It was a mirror, not a pardon, a chance to learn from what he had refused to see. Patricia Kane declined a similar offer. Her 12-year career ended quietly, with a severance agreement and a recommendation that she seek independent education in diversity leadership. Amara didn't look back. She couldn't afford to. The pace of reform required her full attention. Bi-weekly progress reviews, monthly data reports, executive bonuses now tethered to equity benchmarks. Dominion wasn't just making changes, it was institutionalizing them. 6 weeks later, Amara stood at a town hall meeting in the same city where the incident began. The audience was filled with small business owners, teachers, retirees, students. People who had watched the viral clip felt the sting of familiarity. and wondered if anyone in power would finally do something different. She spoke not as a figurehead, but as a builder. "I wasn't kicked out of my bank," she told them. "I was reminded why I built it in the first place." And in that moment, the applause wasn't just for her. It was for every person who had ever been underestimated, dismissed, or excluded by systems claiming to serve them. Amara didn't just change a policy. She rewrote the playbook for corporate accountability in America. And she wasn't finished yet. Some stories sting not because they're unfamiliar, but because they feel too familiar. You don't need to be a CEO to understand what it feels like to be overlooked, talked down to, or silently measured against a standard that was never meant for you. What happened to Dr. Amara Washington wasn't just a breach of protocol, it was a mirror held up to an entire industry. One that too often decides who is legitimate based on appearance, not evidence. And in that mirror, many of us see our own stories, unspoken, unresolved, and all too real. What makes this story remarkable isn't just the twist, that the woman they tried to humiliate was actually their boss. It's how she responded. With intelligence, with integrity, with systemic reform instead of public revenge. In a world obsessed with instant clapbacks and viral outrage, Amara chose something far more powerful: sustainable justice. Because real leadership isn't loud. It's precise. It's structured. It doesn't just fire the wrong people, it builds the right systems. She didn't just fight for herself. She fought for every small business owner whose paperwork was quietly pushed aside, for every customer who had to over-explain their worth, for every professional who's ever been told they didn't look the part. She turned a moment of discrimination into a model for corporate accountability. And that's what ethical leadership looks like. And here's what I want you to remember. The system won't change because it's convenient. It changes because someone demands it, risks for it, and refuses to let injustice hide behind professionalism. Financial discrimination is real. Racial bias in corporate spaces is real. But so is the power of one voice that doesn't stay silent. That's what makes stories like this more than just stories. They become blueprints. If you've ever been in a room where your worth was questioned before you even spoke, if you've ever had to prove your legitimacy twice just to be treated half as well, if you've ever seen someone get dismissed not for what they lacked but for who they were, then you understand why this story matters and why more stories like this need to be told. So now, we turn to you. What injustice have you witnessed? What story have you carried but never shared? Drop it in the comments below. Your voice matters here. Your experience could be the one that opens someone else's eyes. And if this story moved you, if it made you think, reflect, or remember, don't keep it to yourself. Share it. Someone you know may need this more than you realize. And don't forget to subscribe to Radio Life Stories, where we tell the stories that other platforms avoid, the ones that reveal who we are and who we still have the power to become. Because change doesn't just start in boardrooms. It starts in how we listen, how we speak up, and how we choose to treat one another when no one's watching.